Hello and welcome. Are you curious about creating an effective equity compensation report? Well, you're in luck because today we're diving into what should be included in an equity compensation report. Whether you're an HR professional, a financial analyst, or an executive, understanding the components of this report can elevate your insights and decision-making processes. Define equity compensation. To start off, let's understand what equity compensation is. Equity compensation refers to the practice of granting ownership in a company, usually through stocks or options, as part of an employee's remuneration. This form of compensation aligns the interests of employees with those of the shareholders, providing great motivation for contributing to the company's success. Key elements of an equity compensation report. Number 1. Executive summary. An effective equity compensation report begins with an executive summary. This section provides a brief overview of the report's content, outlining key findings and recommendations. It should capture essential insights at a glance, aiding busy executives or stakeholders in understanding the report without diving into detailed sections immediately. Number 2. Equity plan overview. Next, provide an overview of the equity compensation plan. Include details such as the types of equity used, stock options, restricted stock units, etc., eligibility criteria, vesting schedules, and exercise prices. This section sets the foundational understanding of how the equity is structured and what the objectives of the plan are. Number 3. Valuation metrics. Valuation metrics are critical in assessing the financial implications of the equity plans. Include valuation methods like Black-Scholes models or binomial models used in valuing stock options. Highlight historical trends and projections. This transparency helps in understanding the worth of the equity when granted and realized. Number 4. Participant information. Detail the demographics of equity plan participants. This may include the number of employees participating, their job levels, departments, and geographical information. This data helps in analyzing the distribution of equity across the organization, ensuring fairness and strategic allocation. Number 5. Financial impact analysis. This section focuses on the financial ramifications of the equity compensation plan. Include information on expenses recognized in financial statements, expected future expenses, and dilution impact. Analyzing these factors is vital for financial planning and maintaining shareholder equity value. Number 6. Performance metrics correlation. To gauge the effectiveness of equity compensation, include analysis on how equity awards relate to company performance metrics. Compare performance indicators like revenue growth, profit margins, or stock price appreciation with the equity compensation to evaluate alignment with corporate. Number 7. Compliance and governance. Equity compensation reports must adhere to legal, tax, and regulatory requirements. Include sections covering compliance with relevant laws like SEC regulations, SOX compliance, and tax considerations. Moreover, outline corporate governance policies that oversee the equity compensation plan, future trends, and considerations. Finally, consider including a section on trends and recommendations. Discuss emerging trends like increasing use of performance-based equity, new regulatory impacts, or changes in market practices. Providing foresight helps stakeholders prepare and adapt strategies accordingly. Crafting an equity compensation report requires careful inclusion of numerous components, each offering unique insights and implications. From understanding the equity framework to evaluating financial impacts and compliance, these reports are instrumental in decision-making and aligning workforce incentives. Creating a comprehensive and meticulously detailed equity compensation report not only aids internal analysis, but also strengthens stakeholder confidence. With these key elements covered, you are set to produce a report that is both informative and impactful. Thanks for tuning in, and get ready to make strategic choices grounded in clarity and precision in equity reporting.